Your business can make money and still be failing. Sounds strange, right? Let me explain. Hello everyone, and welcome back to the channel. Today, we're diving deep into one of the most critical, yet often misunderstood, business concepts: profit versus revenue. Forget the complicated textbooks and confusing jargon. We're going to break it down with simple, real-world examples that you can apply to your own hustle, whether you're selling online, running a small shop, or just starting to plan your big idea. By the end of this video, you'll have a crystal clear understanding that will completely change how you look at your business finances. So, grab a notebook and let's get into it. First up, let's talk about revenue. Think of revenue as the big, flashy number. It lists the total amount of money your business brings in from sales before any costs are taken out. Every single cedi, dollar, or naira that a customer pays you for your product or service contributes to your revenue. If you sell 100 shirts for 50 cedis each, your total revenue is 5,000 cedis. Simple as that. Revenue is a great starting point because it tells you if people are actually buying what you're reselling. It's a measure of market demand. When you see your revenue growing month after month, it feels amazing, right? It shows your marketing is working, your product is attractive, and your customer base is expanding. It's the top line on your financial statement, and it's the number that often gets all the attention in headlines. This company made $1 million in sales. That's revenue talking. It's a crucial metric, but it only tells half the story. Now, let's talk about the real hero of the story: profit. Profit is the money you're actually left with after you've paid all your bills. It's the money you can take home, reinvest into the business, or save for a rainy day. To find your profit, you take your total revenue and subtract all your expenses. What are expenses? They're everything you spend money on to run your business. This includes the cost of the materials to make your product, employee salaries, rent for your office or shop, marketing, and advertising costs, transportation, electricity bills, internet, even the packaging you use. Everything. Profit is what truly determines if your business is healthy and sustainable. You can have millions in revenue, but if your expenses are higher than your revenue, you're not making a profit. In fact, you're losing money. Profit is the bottom line, and it's the number that ultimately keeps your business alive and growing. Let's use a simple, practical example to make this crystal clear. Imagine a young entrepreneur named Kofi who starts a small bakery. In his first month, he's incredibly busy. He sells cakes, bread, and pastries, and at the end of the month, he counts up all his sales. He's made a total of 10,000 cedis. That's his revenue. He's excited. 10,000 cedis sounds fantastic for a first month. But now it's time to calculate the profit. Kofi sits down and lists his expenses. He spent 3,000 cedis on flour, sugar, and other ingredients. He paid his one employee 1,500 cedis. The rent for his small kitchen space was 1,000 cedis. His electricity and water bills came to 500 cedis. And he spent 1,000 cedis on flyers and social media ads to promote his bakery. This brings us to a very common mistake many new entrepreneurs make. They get obsessed with revenue and forget about profit. It's what I call revenue vanity. They celebrate hitting a big sales number without paying close attention to their rising costs. Businesses don't pay their bills with revenue. They pay them with profit. Focusing only on revenue can lead you to make poor decisions, like spending too much on marketing for low-profit products or offering huge discounts that wipe out your margins, all in the name of boosting that top-line sales number. So, how can you apply this lesson to your own business starting today? It's simple. Start tracking both. Don't just look at how much money came in. Create a simple spreadsheet or use an accounting app to diligently list every single expense, no matter how small. At the end of every week or month, calculate your total revenue and your total expenses. Then do the most important calculation: revenue minus expenses equals profit. This simple habit will give you a true picture of your business's financial health. It will help you identify where your money is going and find ways to reduce costs. Maybe you'll realize that one of your products has a much higher profit margin than others, and you should focus on selling more of that. Or maybe you'll find you're overspending on a particular subscription service you don't really need. Knowing your profit number empowers you to make smarter, more strategic decisions that will lead to long-term success and sustainability. In conclusion, while revenue is important for showing growth and market demand, profit is what truly matters for survival and success. Revenue pays for the party, but profit keeps the lights on for tomorrow. So, from now on, I want you to change your mindset. Don't just ask, how much did I sell? Start asking the more powerful question, how much did I actually keep? That simple shift in focus is the difference between running a hobby that costs you money and building a real, profitable business that can support you for years to come. Thank you so much for watching. I hope this breakdown was helpful. If you got value from this video, please hit that like button. And don't forget to subscribe and turn on notifications so you don't miss our next video on practical business tips. If you have any questions or want to share your own experiences with profit and revenue, please drop a comment below. I love reading them and will do my best to reply. Until next time, keep learning, keep building, and focus on that profit. See you soon.